Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's co-founder at Likefolio. Welcome back to the show, Landon.
Thanks. Great to be here.
All right, so we're talking Dick's Sporting Goods. It seems like the 800-pound gorilla in the room. They got a couple small competitors. The stock's had a nice run so far this year, but Landon, it's pulled back about 14% over the last couple months. Do you guys have positive data on this one going into their report tomorrow morning?
Yeah, and when you look at the stock chart of this, you can see, from the last earnings report, which was blowout earnings, it gapped up significantly and ran a little bit after that. So it gapped from about 189, I think, to, over, it got up to as high as 225 after the gap and run. And we have completely filled that as of last week. That gap was filled back down to, I think, 183. We're back up to 194 now. So, we're now pricing this just slightly above where it was before they had a killer quarter. Same store sales were up 2.8%. Earnings per share beat significantly versus the expectations. They had their largest sales quarter ever. They just did really well. So it's interesting to see how the market reacts with that earnings, and then 3 months later, now we're valuing them at about the same place, which tells me that expectations have to be a little bit lower. They have to think that was an anomaly quarter. When I say they, I mean investors or analysts, anomaly quarter, and that 2024 isn't going to live up to that type of quarter going forward. But I tell you what, the data that we've got looks pretty good. I mean, web visits are up about 4% on a year-over-year basis, really crushing the two smaller competitors, Academy and Hibbs, who are both in the negative. Happiness is strong at 73%. Everything that we're showing is that this company is doing well. The last quarter makes sense to us when you look at how strong their web data was, and the general demand mentions are also up significantly. So for us, I think that they are on the right track. I do think that analysts are probably going to get this one wrong if they're expecting weakness coming from Dick's. Now, I don't think that last quarter is going to, repeat this quarter. It was a huge one, but I don't think that it was a fluke either based on our data. I think that they're going to be able to hold this. So, if they held at 225 and the stock had been sideways since then, I'd be pretty neutral saying, hey, this is priced right. The stock's pretty high. But this pullback is really, I think, an opportunity to jump into a company that has shown that they're dominating, and all the data that we've got gives us no yellow or red flags to say that has stopped.
Yeah, Landon, when you look at this company, the last two earnings events, gaps, right? One down, one up. You're right, it's come all the way down to fill that gap. But who's their competition? Who's their real competition? Is it Foot Locker? No. It used to be Sports Authority. Remember, they were a real competitor. They're out of business. Tom mentioned two smaller competitors, but in terms of a large, real competitor for this, I mean, the new ads they're coming out with Will Arnett, Catherine Hahn, and J.J. Watt, I mean, these are strong. This is a strong company doing good things, and, who really does compete with them? Because the two names you have up, they're dominating them. There's attrition that is helping them. Who's there, Landon? This is almost a monopoly in terms of sporting goods, other than direct to consumer from Nike and so on. Who do you think?
I think that the only, that this is kind of weak, but I'd say Target and Walmart, their sports section, but it's not even close to walking into Dick's. I mean, it's nowhere near. I mean, if you got a kid that's in a sports league and you need all the latest, greatest equipment to start the season, you're not going to Target or Walmart.
No.
Now, maybe if you just need a basketball, maybe, but that's not where Dick's is making their money. I mean, they had a significant increase in the ticket size that they had over the last quarter. So they're getting more sales. People are going to Dick's to gear up and get a lot of stuff at once or get really expensive stuff. So, I mean, it's direct to consumer, I guess. It's, maybe Foot Locker a little, you could make a weak argument for the, like I said, Target and Walmart, but no, they're pretty close to a monopoly. I mean, Academy and Hibbs are tiny, and Dick's is just, they're eating their lunch. So I really like, the position that they're in. They have become the go-to place for all sports related needs. So yeah, this is a great one. And they just increased their dividend 10% quarterly from 1 to 110, showing confidence that this is continuing. So I don't, unless I'm missing something, I don't understand where the big pullback came from. What's the logic behind that big pullback? Nothing in our data has that any justification for that. So in my mind, you get the knowledge of what they did last quarter with the potential of that continuing at the price before that knowledge came out, right? I mean, maybe just a slight, $5 higher, 189 to 194, but still, this is. I love this pullback as a potential investor in Dix. This is a great opportunity, I believe.
Yeah, and I think maybe part of the reason it did sell off because it rallied a few more days after that gap up post earnings. But I mean, you look at technical levels, the RSI was near 90 at that point. So, and it had run into that just because the overall market was moving higher. But Landon, if you had a score on this one, I mean, the pullback definitely helps kind of equate to your data a little bit. But are you going, extremely bullish on this one going into this result?
It's not extremely bullish. We're only at a plus 20, which is still a very bullish camp. But everything that we've got is saying that we think that they're going to continue with success. I don't think they're going to report the same kind of quarter they just reported. But I think that what they're going to report is going to show investors and analysts that it wasn't that big of a fluke and that 2024 is really shaping up to be a good year. Again, the pullback here makes it very attractive. So we're plus 20 on this one, leaning into this one bullish, but not all in with calls, but still want to take a good position for the upside. All
right. Great stuff. Great data as always, Landon. Appreciate it.
Thank you, guys.
All right. That's Landon Swan, co-founder at Likefolio, breaking down the data for us. Kev, implied volume.